Well, I wouldn't be surprised if you think this could be a case of deja vu, because once again, we have seen US share markets decline, and this is 4 weeks in a row. It seems like I've delivered a pretty similar message over the past 2 weeks, announcing that shares in the US have declined over the previous week. But once again, investors continue to be concerned about what is happening in Europe and what this will mean for the global economy. But looking a little bit closer back here at home, the NZX 50 has actually been doing relatively well for the local markets, and it's mainly to do with some of the big companies announcing some reasonably good results. Over the past week, looking a little bit closer into these, we did see Fisher & Paykel Appliances announce good profits over the past financial year, and this is relative to the loss that they made in the previous year. And we can't forget that they are playing on the international market, dealing with some pretty difficult trading conditions on the global market, as well as dealing with a very, very high New Zealand dollar, just like our New Zealand farmers are. Another company that's also doing pretty well is Mainfreight. Mainfreight announced a record profit last week. Of course, they're once again trading on the international market. They've lifted their dividend, and also their share price on Friday lifted to an all-time high. Well, with US markets down, we also saw the US dollar come under some selling pressure last week, which meant that the New Zealand dollar did lift. We've seen plenty of media talk about what is happening in Europe and the debt crisis, but we do believe that once this does start to refocus back on the US economy and their issues, that we could see a major sell-off for the US dollar. This is the key reason why we are picking that the New Zealand dollar will lift even higher than what it currently is. In fact, last week we did see the Kiwi dollar lift to a 3-year high of around 82 cents against the US, and we are picking it to lift even higher, perhaps around 85 cents or even higher than that. We could see it also lift over the next couple of days, potentially touching over its post-float highs of around 82.15 against the US dollar. Looking a little bit further ahead, we are picking that the New Zealand dollar will fall against the US, but unfortunately, it's going to average a little bit higher. We have seen a structural shift in the New Zealand dollar, and we could even average around 75 cents over the next 20 years or so. We're here on the local market. Beef prices were actually fairly steady here in New Zealand, and in some cases, species prices lifted over the past week. And looking a little bit further ahead, it is likely that we could see a bit of pressure come onto the market, given that the Kiwi dollar has risen over the past 7 days, and we are picking it to rise even further. In addition to this, the US market is looking a little bit more unsettled now than what it previously was. But it will be interesting to see how beef demand in the US does hold up over the next couple of weeks. Of course, last week it was Memorial Day, and it does suggest that some Americans will be getting their barbecues out, and so they will be demanding a bit more beef over the next few months than what they have been over the past few months. So what am I picking for beef prices down the track? Well, I am picking that the US market is a bit more unsettled now than what it previously was. However, we can't look past the fact that US beef prices are at very, very high levels and continue to be at these levels that we haven't seen in a very, very long time. So while we may see a little bit more uncertainty going down the track, prices are still looking pretty sharp, although we have to be a bit cautious about expecting too much too soon at the beginning of next season.